So I recognize a few of you. I think a few of you have been in my office, or I see you around school with kids and stuff. So anyway, my name's Nate Sponenberg. I have a firm here in town. It's called Sponenberg and Company, CPA firm, traditional advisory firm as well. We do all that kind of stuff. Can you guys hear me okay? Is this thing on? There we go. How about that? There we go. Cool. All right. So anyway, just a little bit about me. I moved here in 07. I graduated from school in 99, my master's at Utah State, and then I went to work for PricewaterhouseCoopers in the early 2000s and worked for a company called LECG that did litigation support. So we would do like damage calculations for wrongful death, personal injury, lost profits, business valuations, all that kind of stuff. And then I went to work for a small firm in 06 in Bountiful that specialized in auto dealerships. And one of our clients was Castle Rock at the time. And I knew the previous owners of Castle Rock from when I was a kid. So I ended up working with them again when I go to this firm. And he asked me one day, he goes, "So what do you think of Evanston?" And I'm like, "I don't." That was my answer. And he goes, "I need a CFO." Because he had 3 auto dealerships. And so he talked me and my family into moving up here. And then we moved up here in 07, and then the crisis hit, and dealership was struggling. So I started looking around town, and there was one other CPA in town, and he was like 62 years old at the time. And I thought, I should open my own firm. So I opened in 08 and been here ever since. I love Evanston. I love Wyoming. I hate the weather, but other than that, it's although this is a weird winter, I'll tell you what, because I've been here almost 20 years now, and this is by far the mildest that we've had. But I have a feeling it's coming, and we're just going to get freaking buried. And I'm going to be hating life trying to move snow during tax season. That's always fun. But anyway, that's a little bit about me. We've got 6 or 7 people that work for me in my office that we do all the stuff that I'm going to kind of go over with you tonight on what you need to be aware of with your businesses. And anyway, that's a little bit about me. And like Rocco said, I don't mind questions. I tend to get a lot of questions this time of year every time I come, because we're going into tax season and everybody has a million questions. And what better place than to ask it here, because you get it all for free, right? So, all right, how many of you guys are doing the competition part of Jumpstart? Cool. Do you mind telling me a little bit about what you're doing?
We own together, but it's mainly hers. We own a t-shirt business in town.
Oh, cool.
We do engraving, screen printing, embroidery, and
oh, this is cool. We're gonna have a microphone jockey running around.
All right. So our business is screen printing, engraving, embroidery. We do hats, shirts, jackets.
Cool.
You can embroider shoes. We engrave anywhere from wood to leather to metal.
Why'd you decide to do that?
And her old business was the same. We used to have a t-shirt business for about 10 years in California, Hawaii.
Hawaii? How do you confuse those two places?
No. So we moved up here, and she didn't like working for herself, so we decided, or didn't like working for anyone.
That's why she's working for herself.
Yeah, she's working for herself.
Cool.
And see where it goes from here.
Great. Somebody else rose their hand too. What are you doing?
Sure. So we're an enablement company. We focus on helping businesses, specifically in mining resources and defense adjacent, regarding getting capital and going from either a smaller exchange or uplifting to the New York Stock Exchange. So around cybersecurity risk, basically governance.
Cool. Awesome. Anybody else want to share what they're doing?
Oh, you don't have a question for me?
Well, I'm just like, no, I think it's cool. I just want to kind of get an idea about like what you guys are doing.
Yeah. Mine's kind of a two-part, because any project that usually has software. So my main company is a software development firm. We build all different types of software, from mobile apps to AI
Cool.
models. But passion project right now has been trying to open up a golf simulator here, but mainly to beta test our golf course management software to pretty much just run any golf course simulator or course facility.
Awesome.
Yeah, yeah.
I'm a big time golfer. I freaking love that. That's
Yeah.
that's great. That's great. Cool. So this leads in a little bit. So there's a TV show or a movie back in the day. My kids were younger, so early 2000s, called Robots. Anybody ever see that? About all the different little robot pieces, and you had the low income people and the shackle stuff. But there was the big poobah in there, the guy that kind of ran the factory or owned everything. I can't remember his name, but he said this in the movie, and I always thought it was great. He's like, find a need and fill a need. And that's what you guys are all doing, is you're trying to start a business, right? If you want it to be successful, you got to find a need and you got to figure out a way to fill it, right? So when you're going to run a business, especially at the very beginning stage, you need to be able to identify what it is that you do well and do that, and hire people or get help to do the rest. Because you get spread too thin. As small business owners, you end up doing everything from sweeping the floors and cleaning the toilets to whatever it is that you're trying to sell and do, whether it's a product, a service, whatever it is. And the stuff that brings in money into the company is the stuff that you do well. That's why you had the idea, or it's a passion that you have, it's something that you do. So that's the stuff that earns you money, not cleaning the toilets, not doing the books, or whatever it is. You've got to be able to understand what it is you do well and accelerate at that and make that more and more efficient, and get help with the rest of the stuff. Don't be afraid to branch out and take a risk to be able to do it. So then the next step as you go into your business stuff is calculating what risk is. This is the thing that I think is the most misunderstood by people in general, is what it really means to risk everything, right? I had a boss. I tell this story every year, so if people are here, it's one of my favorite stories for me from a learning process. Is when I was doing litigation support, and there was like 10 of us on the team, and it was raise time. And that type of work, it's writing reports for court. So we're giving them to attorneys that we're working for as their expert witnesses. And then the other side is hiring somebody just like us to try and poke holes in our calculations, and we're trying to poke holes in theirs so that the court can decide who's right or who's wrong, or if there's some sort of hybrid or something in there. And my boss comes to me and he goes, I want you to calculate your raise for this year. I'm like, sweet. I get to calculate my raise. And I'm like, okay, I know that you bill me out at X amount an hour, and here's how many hours I work, and blah, blah, blah. And right now I'm getting a certain percentage of that. And then, so I do this great little presentation and take it into him, and he looks at it and he says, really good presentation. He says, but I got to ask you one question, or a few questions. I said, okay. And he goes, do you have a mortgage? And he knew I did, but we were a pretty tight group. And I'm like, yeah, I have a mortgage. And he goes, do you think Roger down the hall has a mortgage? I said, yeah. How about Corey? Yeah. How about Laura? Yeah. He goes through our whole team. And he goes, I'm 100% responsible for all the revenue that comes into this place, because I've got to get the projects for you to work on. He goes, I have a mortgage too. He goes, so not only do I have to worry about paying my own mortgage, but I have to worry about paying 10 other mortgages for everybody that works for me. And he goes, you could get fired today. It would suck. You got to go find another job, but you've got a skill set. You'll get hired somewhere. You can go work. He goes, if I get fired, or if I lose my business, I not only lose everything that I have, but I've affected 10 other people, and it's a lot harder for somebody like me to be able to go find a new job somewhere, because he's risked everything. He's put everything into the business. And that's really what risk is all about. You know, even people I've had people work for me in the past that will say, well, you bill me out at X amount per hour. You're only paying me this per hour on average. You're pocketing all this money. And I'm like, wow, do you think that desk is free you're sitting at, the software that you're using, the computer, all the overhead? People, you really don't understand what it means to have overhead until you're the one sticking your neck out that can get cut off. And that's what risk is. You need to understand how to calculate what your risks are, and you need to understand how to manage it. And that's where the marketing versus what the market is and like what marketing is, right? So you're going to pinpoint your advertising. You're going to pinpoint how you try to find that revenue source. But in order to do that marketing piece, you've got to understand the market that you're in, right? Like I can't come in here from California and charge California rates to Evanston, Wyoming. I'd have no clients, right? It always amazes me when I meet other CPAs and stuff, how much like somebody in Southern California is charging to do things. I mean, it's like 10 times the amount. But their overhead, their costs, everything that they have is 10 times the amount of what it is here in Evanston, Wyoming. So you've got to understand your market and to know if there is a market for what it is that you're trying to sell. Who am I selling this stuff to? Are there, and I'm always amazed. The thing that I love most about my business is when new clients come in and they start to tell me about what it is that they're doing, like what their business is. And I'll tell you, the ones that I sit back in my chair and go, there's a market for this crap? Really? There is. They're the ones who are the most successful. They're the ones that blow my mind. Like the one that you would think that's just like, oh, a no-brainer, they're going to do well. They tend to struggle more than the one that like I could never fathomed there's a market for it. And that's where you guys are all unique in finding that need and filling that need and understanding what that is and how to do it. It's fascinating to me and it's really fun. That's why I mean, what you're doing sounds amazing. Yeah. Like, I mean, it's great. I love the golf thing because I play way too much golf. Ask my wife. And even t-shirt embroidery stuff like that. There's a need for that. So let's fill it. Let's do it. Okay. So you got your business idea. You've thought through it. You've written your business plans. You're doing all that stuff. So now we got to get into the structure. And have you already done the law piece? So they'll probably go over this a little bit in the law. I'm more of the input when it's in my office from how are we looking at this structurally from a tax perspective, tax and accounting perspective, and how the different entity types that we're going to go over are applicable to you or how they work or how we are going to evolve through the process of the different entity types. Because for tax purposes, we might want to make different elections or do different things where we change the tax structure of it. But the actual formation of the entities you should have done by an attorney because it is actually practicing law. And I always think I got a couple of people in my office that are getting ready for the CPA exam. And they're one of the sections in the CPA exam is business law. And I always think it's funny how attorneys really get pissed off at us accountants for practicing law when we also have to study it and pass a portion of our CPA exam on business law. But anyway, I can't like form an LLC for you. You have the attorneys do that, especially if you've got partners. And I'm going to go through that in a little bit. But, when I'm talking about the entities, I'm going to talk about how they're taxed and how they affect you guys as owners. So, and if there's ever any questions, just raise your hand and spit it out. I don't care. Yes, you can. One nice thing in Wyoming is that it, especially we're the birthplace of LLCs. Wyoming created those. We're a pretty private state. Delaware might be a little bit more private as far as like what information I can see when I log on to the Secretary of State website to see who owns what. Whereas like California, you can probably see all their articles of incorporation, who all the owners are, their percentage interest, their social security numbers, their birth dates, everything. But yes, you can go create some of these things. And like a single member LLC, if you're the only owner and you want to go set up a single member LLC, very, very easy to do on the Secretary of State website. If you're going to get more complicated than that, like if we're looking at more of a corp, or if we're looking at or if I've got more than one owner in here, like we got 2 or more of us as partners, that's where I would definitely involve an attorney because they'll talk about all the legal stuff that needs to be in an operating agreement or a shareholder agreement. So the first type of business is pretty, go ahead. We are registered agents for a lot of places. If you're a resident of Wyoming, I tend to try to make sure that the business owner, if they're a resident of here, to be their own registered agent, so I don't have to charge them the fee and I don't have to worry about serving them if they get sued or something like that. But people that are out of state that aren't residents that have a Wyoming entity, then we'll be the registered agent. I used to do it a lot, and then I just got to where I was like, this is getting ridiculous because there's like 300 of them that I'm an agent for, and I'm not going to remember. You got to have good records and stuff like that. So when you start a business, you got to look, how am I going to account for this? How am I going to tax this? How's this all going to go? The most common and easy way to do it is a sole prop. I don't need to form an entity. I can just start hanging a shingle and saying, as long as I'm not breaking any laws from like a professional standpoint, like if I don't have a CPA license, I can't hold myself out as a CPA. But most businesses, t-shirt shop, programming, golf, military stuff, you might not have to have any kind of professional licensing around it. You can set yourself up as a sole proprietor. And there's two types of taxation theories, right? It's flow through and non-flow through or standalone. Most small businesses are all flow throughs. And so that means that the entity itself or the business itself does not pay its own income tax. The owners pay the tax on whatever the profits are of the business. Okay? They flow through to the individual. So that's where all the taxation of it happens. And when you're a sole prop, you're going to probably, for most part, you're going to file a Schedule C on your personal tax return that reports the revenue and the expenses for that business on your Schedule C. And then the net profit for that goes over to your 1040 to get taxed, right? And then the other form is the Schedule E. So the Schedule C is like operating businesses. Schedule E is going to be rentals, right? So if I go buy some rental properties and I'm renting them out, I would report that activity on Schedule E, and all other businesses pretty much are on Schedule C. And the main difference for that is the self-employment tax. Try not to bounce around, but everybody here has had a job at some point, right, where they got a W-2? If you look on your W-2, there's FICA and Medicare wages, right, that you're having to pay FICA and Medicare on. And you're paying half of that. They're taking half of it out of your check, and then the company you work for has to match that FICA and Medicare. So those FICA and Medicare are actually called employment taxes. So you're paying that when you earn income. So when you're self-employed and there's no withholding mechanism happening, you have to also pay what's called self-employment tax, which is basically both sides of the FICA and Medicare. Okay? But rental businesses, Schedule E is rental income, it's passive, so it's not subjected to employment taxes. So that's why the different form. Go ahead. A nonprofit? Yeah, you wouldn't want to do that as a sole prop. You'd want to either do an LLC or a corporation, depending on what it is that you're doing. Yeah, that's a good question. The next is an LLC. It's also a flow-through. And an LLC is actually technically what's called a disregarded entity because there's no tax form for an LLC, right? So the tax form that is the default for an LLC when you get that with the IRS, if there's only one member, and a married couple can be considered one member. So even though me and my wife own an LLC, we can be counted as one partner. But if you have unmarried partners, then you got two or more. So if it's a single member, the default just goes to your Schedule C, just like a sole proprietor would. Everything's reported just like that. Or if there's two or more people, then the default is a partnership. And we'd have to file a separate partnership tax return for the LLC, where we split the profits and losses between the ownership of the company. So if we're 50-50 partners in an LLC and it nets $100,000, I'll report that on the partnership tax return, and the net profit would then get split, and then I generate what's called a K1. Anybody heard of a K1? I'd get a K1 for $50,000. My partner would get a K1 for $50,000, and then we report that on our personal tax returns so that it gets taxed. Okay. Next is a corporation. There's two different types of there's really three different types of corporations, but the most common are an S corporation, which is also a flow-through. It's just now we're in more of a corporate structure, and the net profit still gets reported out on a K1. And the difference is with the S corp versus an LLC is I can have a one-member, one shareholder S corp and still have to file that separate S corp return. But I can have multiple members in there as well, or shareholders. It doesn't just have to be one. But the income on the S corp flows through just like on the partnership to whoever the owners are, and they pay taxes on it on their personal tax return, versus a C corp, which is a standalone. So the C corporation will pay its own income tax. So if it has net profit, it's got to pay its own income tax. And then if it distributes those profits out to the shareholders, like dividends, it's a taxable transaction again to the shareholder, right? That's the double taxation that you hear about during election season and stuff like that. So, and for a nonprofit, you would want to probably do, I like the corporations with nonprofits so that we don't have any kind of flow-through issues, so like a C corp. But then you have to take it a step further and get tax-exempt status with the IRS, and then you don't end up filing an 1120, you end up filing a 990, which is a nonprofit return. So, any questions with this whole deluge of information?
Yeah, just using the single member example, what are the, I guess, main differentiations between step C through the LLC flow-through versus now you're using the S corp inside the LLC as well?
Great. So if I form an LLC, single member or multi-member, doesn't matter, and I make what's called an S election, and I want to be taxed as an S corp, I'm still an LLC in the eyes of the law. So if I get sued or if I'm involved in any kind of legal dispute, the LLC statutes are going to be what covers my lawsuit, right? But the difference in the taxation is, okay, I'm trying not to nerd out on you here, but but
That's the usual combination.
it's a great, because I like to start out my clients as an LLC, either single member or partnership, depending on what it is, until they're at a certain amount of profit to where it makes sense to make the conversion to an S corp. Because I'm looking for tax savings to elect S status. So the S election is just at the IRS level. It's just at the taxation level. It doesn't change anything with the law. And the main difference between the tax from an LLC as a partnership or sole prop to an S corporation is that I mentioned self-employment tax a minute ago. I got to pay self-employment tax on my net profits in a partnership or a sole prop or a single member LLC. In an S corp, there is no SE tax attached to that, because now that I'm a corporation, for tax purposes, I have to act like a corporation, which means I have to take a payroll, and I got to get paid a paycheck where there is FICA and Medicare being withheld on my paycheck. So the trick is you say, okay, well, when does my profit get above a point where I would have to pay me a salary anyway? And arbitrarily, that's usually in the $40,000 to $50,000 range, to where if I'm netting $100,000 and paying SE tax on the full 100, well, if I convert to an S corp and pay myself $50,000 on a paycheck, I'm going to get a W-2 from my own company now for $50,000 because I'm paid me that. I'm going to deduct that from the 100. Now I've got profit of 50. So I'll get a K1 for 50 and I'll get a W-2 for 50. So I'm still paying income tax on the full 100, but I'm only paying FICA and Medicare on the 50. What's that? K1s, well, you can pay out, you can take the profits at any time. So that's where people get confused. It's like, okay, I've got an S corp and I net $100,000 this year after I took my payroll, but I didn't take any of that $100,000 out. I could take distributions, I could take that money out and use it myself, but I didn't do it this year. I still have to pay tax on that $100,000 on my personal tax return. So if I've got savings or cash elsewhere that I can pay the tax with, great. So let's just go, in theory, I got $100,000 of profit in there. I pay tax on it, but I don't take a dime of it out. So in theory, the next year, I've got $100,000 extra sitting in my bank account, right? Then I net another 100, pay tax on it, don't touch it, but I paid tax on it. So now I got 200,000. Year 3, same thing. Now I got 300,000. And in year 4, I'm like, I want to go buy a house. And I go take 400,000 out of my corporation. I'm not getting taxed on that 400,000 because I've already been taxed on it. I'm just taking my profits out. So you can take, and those dividend or those distributions on a K1, they are reported on there on how much you took, because it affects your tax basis inside your corporation or your entity. So, yeah.
So what about deductions? What if you made $100,000 and you find $100,000 to deduct? And you don't have to file.
You have to file. You have to tell them what those deductions are.
AI. Can you go to AI and say, no, do my taxes properly?
I suppose you could. I don't care. I get clients that, about this stuff. Sure. I mean, Google's great, AI's great. You can figure out stuff. I have clients come in all the time. I had one client come in and said, hey, I put all this in AI and here's what it looks like. And I'm like, well, you're missing a few things. You know, I mean, AI is smart. It's getting smarter. I think our danger is totally relying on it, because the input into AI, our output's only as good as our input, right? Yeah. It's getting smarter and it's doing things. And yes, there are, like, you know, if all you have is a W-2, you can go on the IRS website and file your tax return for free. You know, it's not a big deal. They're all the same. They're all the same. TurboTax isn't bad. But I look at like TurboTax and H&R Block and Tax Act, all those different things, is like the Walmarts of the tax industry, right? They're like the one-stop shop where you can get a cheaper version of it, but you're not going to get any guidance. You're not going to get any help. And when it's just an individual tax return with W-2s, by all means, go use that. I don't have a problem with that. I mean, it's not going to, I do a lot of tax returns where it's like, yeah, you could have filed this for free and I'm going to charge you $350. But, you know, they like to have somebody sign the return that's going to also be able to, yeah, it's peace of mind. And, but when you start getting into the business entity stuff and you start looking at how I'm going to run my businesses and stuff like that, that's when you need to have somebody who knows what they're talking about when they, to help you and coach you along the way. It's kind of like what Stephanie was talking about with the business coaches that they have on staff there. And that's such a great resource too, by the way, because funding for small businesses it's tough. I mean, that's why we do stuff like this, to try and, you know, incentivize people to come and do it. But having a resource like where Stephanie's at is great. And our local banks are really good too. I mean, you start dealing with the US banks and the Wells Fargos and the, you know, the big banks like that. They're a lot more stringent and tough. So, but we're pretty blessed in this town with groups like what Stephanie has, and like First Bank, Uinta Bank, State Bank. You know, those are good small business banks. They really are. And you get that small town help and relationship that you don't get at a Wells Fargo or a US Bank. Nonprofits are difficult. Like when you go to file we have probably do 10 or 15 nonprofit returns, and they're tricky, and it depends on the size of them, right? Because there's different types of filings depending on how much you have coming in and what your requirements are. Did you have a question?
Oh, yeah, I have a question. So on the self-employment tax, so for instance, if your clients are abroad, you spend 16% of your time abroad, is it like prorated? I know when you're
so international.
It's like 120 or 125,000 is the tax exempt if you're.
That's from income taxes.
Yeah.
So you can, and it's actually if you work overseas, but you have to be gone for 11 months of the 12 a year. You've got to be overseas to be able to take the foreign income exclusion, which is like 120, 125 changes. but you have to physically be out of the country for 11 of the 12 months a year. So your tax home is whatever country you're in.
Yeah, so that's still the same question. So I lived abroad for 20 years, and so then I have to calculate what I was abroad, but I still would have to prorate out to the tax return for employment tax. Do you do that same form, or is it the same process for paying the self-employment tax? So, like, for instance, if you did 90% of 11 months abroad, and you're still paying yourself, but you have a U.S. entity, like you're out sales and traveling, is it, do you still have that?
That's a good question. I don't know on the FICA Medicare piece because that's really what it is. So if you have a business and you're taking a wage and it's a foreign wage, then it's really going to depend on, I think I'd have to look more in the situation to be able to fully answer that, because the income tax, the foreign income exclusion is for income taxes, not the employment taxes. So, oops. There we go. All right. But good question. I have a few clients that I use the foreign income exclusion on, but they're not self-employed either. They're getting paid from the military or a military industrial complex. And so they're paying their FICA and Medicare, I think, on their wages that they're paying the employees because they're coming from a U.S. entity, essentially. So they're still having to pay that, which would be the FICA and Medicare. But the income exclusion on the individual that receives it, we can take that if they're working overseas.
So I basically just go to the IRS website.
I don't know if you can find it on there. Yeah, that'd be great. But that seems like a pretty, you'd almost need somebody who's more into international taxation on how that would work. That's a little bit over my head. I do so little of international stuff, but it's a good question. But I don't think the FICA and Medicare are necessarily affected, but it's depending on how you're getting paid for that to be effective. So, okay, so y'all know who Warren Buffett is, right? He had, I think this was just a few years ago. He was at a college talking to a bunch of business students, and one of the questions that he got from one of the students was, what's the most important thing that I could do to get ready for the real world after I graduate from college? And he goes, if you're going into business, he said, you need to learn the language of accounting. And it actually makes a lot of sense with what he said, because as you guys start your own business, you've got to account for this stuff, and you got to know how to read the financial statement. If you're doing a lot of your own accounting, like QuickBooks Online or QuickBooks or, you know, one of the other, I show a list here in a little bit of the different, you know, accounting programs that you can use. But you got to know how, when you're looking at a financial statement, what is it telling you? If I'm looking at the assets, the liabilities, the profit and losses, cash flow statements, you need to understand what that's telling you. Is anybody in here speaking another language? What do you speak? Romanian. Okay. So if I go to Romania, I'm not going to understand a word, right? And a lot of times, that's what happens with new business owners. They start a business, they start throwing everything in QuickBooks because it's supposed to be easy, and they don't have a freaking clue what it is that you're looking at because they don't speak the language of accounting. And if they're the ones feeding the information in there, there's a good chance that the stuff's in there incorrectly. So you got to really understand what the financial statements are.
Just to add on that, you kind of explain what the risks are with just doing that.
Yeah.
Even just if it is like understanding payroll cost risk.
Sure.
You are paying it or not paying it. I think that was a good call. I think it's being done correctly, but it's not.
I think if you don't know QuickBooks too, like actually truly know QuickBooks, then you're bound to screw something up.
Well, you are, because QuickBooks, just like AI, your output's only as good as your input. And if you don't know where to put something, that's where you're going to have problems. So the first step, before we get into like the different softwares and stuff like QuickBooks, wanted to go through like the basic financial statements and what they mean, right? So a balance sheet, it summarizes your assets, your liabilities, your equity. And the best way I can describe a balance sheet to a non-accountant is to use the example of purchasing a home, right? So if I go buy a house for $400,000, I put $100,000 down on it, and I get a $300,000 loan. If I were to ask you, what's the equity I have in my home? What's the answer? 100 grand, right? That's what I put into the house, right? So my house is worth 400. I only owe 300 on it. I have 100 grand in equity. Everybody understands that analogy a little bit. So if I were to put that on a balance sheet, I'd have an asset for 400,000, liability for 300, and equity for 100. My assets equal my liabilities plus my equity. That's the formula. You got to know that. Assets equals liability plus equity. Your business is the exact same way. What assets do I have in my business? Cash, equipment, inventory, fixed assets, all of those things, investment accounts, bank accounts, whatever it is. Those are my assets. What are my liabilities? Payroll liabilities. If I had to borrow money for the fixed assets or stuff like that, that's going to be my liability. And then the equity is going to be what the difference is in the value of my cash versus the value of my liabilities. Did you have a question? Oh. So, and it's a snapshot at a moment in time. And in a business balance sheet, it's cost basis, right? So in that example, I buy a house for 400 grand. It's worth 400 today, but in 10 years, is it going to be worth 400,000? No. Does my balance sheet change for that? No. Doesn't. Because I still own the asset, right? The value of the liability will change as I make payments over time. But the value on my balance sheet is going to stay the same because I do not true up my balance sheet for market because that means I'd have to pick up income to do it. Double entry accounting, right? So your asset stays there until I sell it. So then let's say I sell that house in 10 years and I get $800,000 for it, right? Well, now I pick up my $400,000 worth of gain because I might have the house paid off in 10 years, so I still have this 400,000 on, but I have no liabilities, so my equity is 400 grand on my balance sheet. Then I sell the house for 800. I get $800,000 in cash. I only have to pay tax on 400 of it because my basis in there was 400, but I got 800, and I don't have a bank to pay off, so now I got 800,000 in cash in my pocket.
I'm sure it's a dumb question, but if you refinance, that re-ups the balance sheet.
It doesn't change the value of the asset, it changes the value of the loan. So you're actually, if you're refinancing the same amount that you had, it won't really change your balance sheet because you still owe the same amount. It's just maybe you're getting better terms, like a lower interest rate or something like that. But if you take cash out, then your liability is going to go up, but you're not changing the value of you still own that asset at what you purchased it for. Just because you keep borrowing against the equity or something like that, you still own that asset. You never true up the asset side for what it's worth until you actually sell it, right? So anyway, a balance sheet is a snapshot in a moment in time. So like December 31st or January 31st, end of month, something like that. I look at it and it tells me the health of my business. Do I have equity in it? Do I have more in assets than I owe in liabilities? And if I do, then I have positive equity. That's the temperature gauge of your business. And it's a snapshot of like a day in time. It's not a cumulative amount, which is what a profit and loss is. So profit and loss or an income statement, I'm looking at it over a period of time, whether it's the whole month. I could look at it for one day. I can look at it for 1 week. I can look at it for a month. I can look at it for 6 months. I can look at it for a year, right? So you look at, and it just summarizes your revenue and your expenses and tells you if you're profitable, right? There's cash flow, cash basis versus accrual basis. There's different things there. But in essence, your profit and loss is telling you whether or not you're profitable, okay? Then the next one is a cash flow statement, because here's where I get a lot of this too. Somebody owes a lot of money, they have debt. So they bring in $100,000 in cash, they have their other expenses, and they also paid out 20 grand in debt payments for the year. And they say, well, okay, in that example, I brought in 100 and I had 50,000 expenses and I paid $20,000 in debt payments. So to me, I have profit of $30,000. And then I come to them and say, nope, your profit's $45,000. I'm like, well, I only have 30,000 left in cash. It's like, well, yeah, but 15,000 of your 20 went to principal payments on your debt. All that does is reduce the liability on my balance sheet. It does not change my profitability. All it does is reduces my cash. And so what a cash flow statement does is it summarizes where am I spending or how's the flow of all of my money coming and going, which is very different than net profit from a tax concern. Way different. And so you need to understand what these three different financial statements are and what it is that they're telling you and how they're built if you're going to be doing your own accounting. So whether QuickBooks is set up correctly or whatever accounting program it is that you're using. So now we'll get into the systems. So most popular, QuickBooks. Their desktop product is great. The problem is that the QuickBooks Pro desktop, they've stopped making as of 2024. And so those are getting phased out because they want everybody in their piece of crap online product. I'm not a big fan. I don't mind it. It's convenient. It has a lot of good features. The problem with the QuickBooks Online is that you cannot, if things are not set up properly, it is a nightmare to fix, an absolute nightmare. I mean, even stuff like, so in desktop, if I have a payroll set up in my desktop, I go in and I put in the unemployment rate and I set up all their stuff and all that. And then I find out, oh crap, I put in the wrong rate. Well, I can adjust my liabilities. I can go fix that schedule and put in the correct rate. If the wrong rate gets put into QuickBooks Online, I got to call QuickBooks and have them fix it. I can't fix it myself. I can't make a payroll tax adjustment. I can't do, it's an absolute, and I got like 55 clients that use QuickBooks Online. So I'm in there a lot and I just, no, that's terrible because I had this conversation with QuickBooks actually. I was like, how can this be so difficult to do? It's because they're two different platforms. They're not even programmed the same. The underlying software is completely different. So what they end up doing is they take your desktop product and they write journal entries into your online. And none of the history's there. It's like if I want to go look at a check that I wrote on March 30th of 2020, I can't find it because I did that in QuickBooks Desktop, not in online. Freaking nightmare. But it is getting better. I will give them that. They are doing better at that, but subscription model. So now even with desktop, there's a subscription fee to it. Instead, before I could buy the software and I owned it. They wanted to push everybody to subscription, which now they require you to have a login even if you're using the desktop product. And who owns the software, or who owns the company file that is being done in this. They still have their enterprise version, and I don't think they're going to get rid of that, but that's the expensive one. You're probably looking at $5,000 for that. I do have a version of it. I use it a lot because all the internal stuff that we do for people, I'm using desktop to do it because it's a good program. It's a really good program. And they've just jacked it up with this online BS. And I get accessibility, having it in the cloud, being able to work on it from anywhere. There's solutions to that with our technology that you could, remote desktop or something like that to house something on, but it does have a few limitations as well. Sage products, you want to be a big size company before you start using Sage. It's expensive. NetSuite, same thing. I laugh at NetSuite. Did any of you guys have XM Radio or Sirius? There for a while, NetSuite was running these ads that were trying to convince users of QuickBooks to go to NetSuite. So I started looking into it. And you're like, even the enterprise software under QuickBooks is like $5,000. It's expensive. NetSuite, you're like freaking 80 to 100. It's like, why are you advertising to people that use QuickBooks? Because I can't imagine a single one of those guys going, sign me up. Man, I get it's going to cost me more, but $80,000? It's crazy. Intact is a pretty good online software. I'm not sure on pricing on that. It's a bigger one. Peachtree's kind of the OG. They were pre-QuickBooks. They kind of have their own. it looks a lot, it kind of feels a lot like QuickBooks, but they were pre-QuickBooks. That's what I used in college. It was kind of fun. But I still have one client that uses Peachtree. And Zoho is a kind of a less expensive version of an online software. And same with Wave. Wave is kind of getting a little bit better. I don't mind Wave. I have a few clients that use Wave. Just give me access. But each of these are meant to build or to help you with tracking your finances for your small business, which is super important to do. But the setup is super important, and being able to build your chart of accounts and which category do these accounts go into, assets, liabilities, equity, profit, expense. Ask my accountant. That's the best thing QuickBooks ever did, honestly, because I have a lot of clients that do their own books, and I'm like, look, if you don't know where to put something, throw it in Ask My Accountant, because then I can go look in that one account and see all 400,000 transactions that they didn't know what to do with and go in and fix them. But at least I know they're in one spot. The ones that drive me crazy is I'll pull up a balance sheet. I got negative assets. I got negative liabilities. I got negative. Everything's backwards because nobody understands debits and credits, right? And that is the foundation of the accounting language, is debits and credits. And I remember in college, very first day of accounting 101, know your debits and credits. What increases, which account increases with a debit, which accounts increase with a credit, which accounts decrease with a debit, and which accounts decrease with a credit. They're all different depending on where they're at in the ledger on the balance sheet or income statement, because debits aren't always the same, and neither are credits. They all have, it depends on what section of the financial we're looking at.
Back in the day with spreadsheets, is that still like something?
Oh, yeah.
Is it the same as all this bookkeeping, or is it just like?
So spreadsheets, though, are more like a fancy calculator, right? So you and you can, categorize stuff. I do get clients that bring in their Schedule C information on a spreadsheet. Here was my revenue. Here were my office supplies. Here was my rent. And it's all kind of there in a nice little. Or I get the ones that bring in the bank statements and they say, all my stuff's there, and I'm like, I got to go through every transaction to see. If you want to pay for it, I'll do it. Otherwise, go do it yourself. But this is the hardest. I feel like this is the hardest part about starting up a business, is just being able to get the book set up and being able to get things rolling like they need to, so that you can actually use the data that these things are kicking out, right? Like I said, you're only as good as your input. And if your input's garbage, so is your output. So you got to be careful with that kind of stuff. Any questions on any of these things? Yeah. Would I recommend? QBO is not bad, but Wave's not a bad one. I like Wave. I haven't had I'll be honest, I haven't ever done any payroll stuff, because payroll by itself is its own complicated beast. That's the thing about business owners, right? Every freaking government entity, federal all the way down through the local city government that you're in, they lean so heavily on you guys as business owners. You are the most picked on people on the face of the earth when it comes to taxation. It would make you sick if you really sat down one time and were able to total how much you're paying in taxes on what you make. And because of all the different types of taxes. Income, property, sales, payroll.
I freaked out when I got there, and I had to basically all my tables and chairs and all my.
Oh, your personal property tax. Yeah, that's.
I walked in and went, what the heck is this? And they told me, went, are you serious?
Yep, they're serious. You could live down in, is it Wasatch County where Heber is?
Yeah.
I got a client down there, and I've never seen this happen, but the clerk showed up at his office and walked through his office saying, well, I didn't see this on your property tax schedule. I didn't see that on your property tax schedule. And I was like, you've got to be kidding me. Because you declare it, right? And so this is when Lori Perkins was still doing ours, and I was talking to her, and I said, do you guys ever go out and do audits? She goes, nope. And I said, that's great news, because now everybody else, we're just gonna go take care of it ourselves. But you know, Wave isn't bad. I don't know what it costs. That's not very much, but Wave's pretty, and it's a little bit better organized than the QuickBooks Online is, especially for a smaller end startup. You know, and at the point you outgrow it, well, you've got enough revenue to do something a little bit more robust at that point. Any other questions on software? Cool, because that sucks. All right, the next thing. Do I hire somebody as an employee or do I hire them as a contractor, and what the differences are? Anybody have an idea? There's 3 tests the IRS looks at, okay? First is behavior control. So if I have control, I show up here, you use my tools, you use my product, here's my clients, you're doing this. I tell you when and where you're supposed to be.
there were no payroll.
Here's Doug.
Taxes.
Cool. Thank you.
It sounds like payroll taxes are sort of the scary thing, which I get. Right?
They're the compliance part. That's why people try to use independent contractors as much as they possibly can. They push the limit with it, and it's because of these things right here, right? If I'm the employer, if I could avoid having to pay payroll taxes, because I tell my clients all the time, I'm like, look, you're going to hire people. What do you want to pay them per hour? And then you need to gross that up about 15% to just cover your payroll tax costs, whether it's FICA, Medicare, unemployment, workers' comp. I've seen workers' comp rates as high as 6-7% because they've got a lot of claims. 9. I've seen unemployment. During COVID, my unemployment rate was 0. No, that was sweet. I freaking love that time. But, and we've had times with, I think it was during the Obama administration, where they lowered the employee portion of FICA, but didn't lower the employer portion that's matched, and that caused a whole bunch of reporting issues if you didn't have your payroll tables and everything set up appropriately. There's just so many moving parts to payroll, which is why it's very appealing to use a 1099. If there was no such thing as payroll taxes, my gosh, every business on earth would be, in the U.S. would be celebrating big time.
But I'm in such a unique situation where the majority of my developers are from Latin America, and we're establishing entities in those countries to retain talent because we would rather much pay the payroll costs there to.
Oh, it's way less.
Exactly, but also at the same time, even if we were hired in the United States, just as an example, we would still do it because they're the output.
Well, their output's good, and probably their market's less. Like, to hire that same person up here, you'd be paying $50 an hour versus 30 or whatever it is.
Is there an amount that you can do that you don't have to do taxes like $3,000?
No, okay. So if I get if I come and do something as a contractor and I get paid $600 less, I don't have to get a 1099 for that. But you wouldn't owe any income tax if all you had was $3,000. Actually, the standard deduction for an individual is like $13,500, somewhere in there. It goes up every year. I always just let my software tell me what it is, and then I memorize it when I'm doing taxes that year. But if I get a W-2 for anything $13,500 or less, and that's the only income that I have for the year, I wouldn't have to file a tax return because I technically wouldn't owe anything, because my standard deduction would erase my income tax on that. But if I got a W-2 for $13,000, I still had to pay my FICA and Medicare, right? It was taken out of my check. Okay? So if I'm self-employed and I get a 1099, if I get a 1099 for anything above $600, all the way up to $13,000, I still won't owe any income tax on that, but I will have to pay the FICA and Medicare on it. So I might get a 1099 for $3,000. I got to report it on my tax return. It ends up getting zeroed out for income tax purposes to 0, but I still got to pay the self-employment tax on the $3,000. I got to pay the 15.3% for FICA and Medicare. Yeah, they're not getting 1099s from everybody, but they should be accumulating how much income that they do bring in. Yeah, but where are you going to do that as an individual unless you've got a business to do that in? Were you going to say something? That's exactly what FICA is. Social Security. Medicare is for Medicare when you go on Medicare at 65. So when you're an employee, you're paying half and the employer's paying half. And then I get a W-2 as the employee. If I'm self-employed and I get a 1099, I got to pay both sides of the FICA and Medicare because I'm both the employee and the employer. I wear both hats. Okay? And I get a 1099 for that. I think this is the first year we've ever really gone deep into 1099 versus W-2. This is the reason why everybody wants to be contractor, is the payroll compliance. So I got to file the quarterly 941. I got to file my quarterly workers' comp and unemployment with the state. I've got to file an annual Form 940, which is the federal unemployment. And then I got to file my W-2, W-3 filing. So I got to give W-2s to all my employees. I got to file the W-3 with Social Security. I got to, if I'm in a state like Utah, where I had Utah withholdings, and I also have to take out my Utah withholdings that I withheld out of there, submit those, and then also submit copies of my W-2s to the state of Utah so that they can see that I actually put them on the W-2s. And then if I've got contractors, I use the 1096 or 1099. So what the 1096 is that it's like the W-3 of the W-2s. So your W-2s are all like, you get a W-2, you get a W-2, you get a W-2. If I have 3 W-2s, my W-3 is a combination of all 3 of those as a total, so I can see what I paid out of my company. If I give out 5 1099s, the 1096 is the cumulative of all the 1099s that I gave out, so that there's a record with Uncle Sam on what we did. And it is a pain in the butt, that stuff. And I'll tell you, dealing with the IRS on payroll, I would much rather deal with the IRS on an income tax issue than I would on a payroll tax issue. They are, and then when you had like during COVID, like the ERC credits, you guys remember those? And huge area of fraud. So then the IRS shut it down, and people are waiting on all this stuff. And then, I mean, talk about that was the biggest nightmare accounting-wise ever, was COVID stuff.
So what if we have a general contractor do work and you make it deducted from your release, but they don't do any of that process? Are we going to get fined?
They could, but then it could also become, this is what happened. This is how people, so the state is really good about catching anybody that should be paying, you know, the company should be paying unemployment or workers' comp on any hidden wages, if you will, that are deducted as contract payments or something like that. Where the IRS really catches you on this type of an issue is if I gave a 1099 to somebody and they make a claim saying that they technically should have been treated as an employee, and they could turn me into the IRS, and then the IRS shows up and says, what we got here? And that is a nightmare when that kind of stuff happens. But so like if I use a service to come plow my snow, and they're an LLC, so I'm required to give them a 1099. So I give them a 1099. I've fulfilled my obligation as the business owner from my reporting standpoint. If they don't pick it up as income, that's on them. Chances are, if they don't so when I have my small businesses come in and they get a bunch of 1099s, I ask them to give me all of their 1099s so that I can add up the totals to see if their revenue is at least equal to what all the 1099s were or more. Because that's what the IRS is doing. If I get a 1099 for 100 grand and I only report 90 as revenue, they're going to catch that. And they're going to tax me on that $10,000 that I underreported. So I always say, give me all your 1099s. I want to make sure that I'm not, when I look at your financial statements and you say your revenue's X amount, but your 1099s add up to be more than that, we got to figure out why. And a lot of times it's because of how, like, oil field companies are notorious for this, right? Because they will, maybe include a per diem or something like that. But if they throw all that in the 1099, then I have to go and back off. Trucking companies are notorious for this because they get a 1099 for the freight, but then they have all these different settlement charges that come out of what the trucker actually receives as revenue. So when I see their bank account, I just see 60,000 goes into the bank account, but the 1099 was 100 because that trucking company took $40,000 worth of costs out of their paycheck, but 1099 them for the 100. So I got to show 100 and then pick up all those costs so I can get down to what they actually got reported to them. So you want to make sure that you don't underreport on your revenue line item, because if you underreport there, they don't have to mess around with any of your expenses or add anything back. If you've underreported what were on the 1099s, they can just say, oh, I'll just add 10 grand to your bottom line and now you owe us tax on that. And it's low-hanging fruit for the IRS.
So on, like, customers or whatever who were tax exempt,
Okay.
does that WAYS program account for that? Like, is there some?
Oh, like on the sales tax side?
Yeah, so like for sales tax purposes,
Yeah, you would set it up in your invoicing, like whether or not this particular customer is subjected to sales tax or not. What's that?
Like, who do you turn that into?
They would give you it. That's all done through the Department of Revenue, the sales tax. Right. Like if you're doing embroidery or something like that for the school district, they're not going to pay a sales tax. So your invoice to them would show 0 sales taxes on it. But then, like if I came in and had you do a bunch of T-shirts for my kids' baseball team, then you would charge me the sales tax. So you'll set up your invoicing according to that. And those guys, if they're tax exempt, they've got to show to you that they actually are tax exempt. They've got to give you their sales tax exemption certificate.
Yeah, what justifies sales tax exemption? Like, say, is it like if you go to resell it?
Okay, so
Because where's the, like
if you're sales taxes, what another crock of crap. Sales taxes? No, they really are. I hate sales tax. I think that's freaking highway robbery. I don't mind the income tax. But sales taxes, come on. You guys just, I don't know. And then when you see how the government spends your money, it just pisses you off. Sending it to Nigeria for circumcisions or whatever the government was doing. But sales taxes, okay. So if you're in the business of reselling, then you're buying your inventory to sell. So you shouldn't technically be paying sales tax when you purchase those items. You need to have a sales tax license in order to give to your vendors, that they are not supposed to charge you sales tax because you're buying it for resale. Then when you sell it, you got to collect sales tax on the full amount, and you are the intermediary. That's it. And this is where it gets really hard for small businesses because I sell an item for $10. I got to collect $10.05, right, for the sales taxes. And or $10.50, sorry, 5% of $10 in our county. If I'm in Rock Springs, it's $10.60 because they're at 6% rate. Right? Every county in our state, the state sales tax is 4%, but then each county can add on to that based on whatever we've passed in our local governments for whatever reason. So in Uintah County, we're 4% to the state, 1% to Uintah County. So I have to put that in there. So you got to track if you're selling in multiple locations, which county you did it in, so you can do the right sales tax. Then I collect that $10.60. Let's use a bigger number. I sell something for $100. I got to collect $105. Jeez, I'm tired. It's already tax season. I'm sorry. So I collect that $105. $105 goes into my bank account. I have to have my accounting set up to where that $5 doesn't go to revenue, goes to a liability. I owe that to the state. But it's sitting in my bank account. And we are so conditioned, especially nowadays, because we look at our damn phones and I log onto my bank app and I'm like, oh, I got $10,000 in there. I'm going to spend it. But maybe $2,000 of that's the state's. And I go spend it. I go buy something for my business. Or hell, I just take it out of my company and go spend it on a trip, whatever. I still got to submit those sales taxes. And that can get really dangerous because if you get upside down with sales taxes, that's a nightmare. It's an absolute. They're way meaner than unemployment. It's a big deal. So if you are in a business where you are required to collect and remit sales taxes, you better have that stuff set up properly and know what it is that you're looking for. And then it depends on the schedule you're on with the state, and that depends on how much you're making in revenue, whether you're going to report that monthly, quarterly, or annually. Like if I'm not selling very much during the year that I got to do sales taxes on, the state will allow me to file on an annual basis. But that means I'm not remitting that till later, right? And so, because you remit it when you file the return. If I do a lot of sales, they'll put me on a monthly schedule. So I look at my sales for January, and then I'm also looking at, am I an accrual basis or a cash basis? Is it what I collected or is it what I invoiced? Big difference. Because I might have some deadbeat client that doesn't pay me, but I got to remit the sales taxes I collected because I'm on an accrual basis with the state. That's a nightmare. It can be.
Consider that a loss? Like, say you did do something for a customer and they just never paid you?
If they don't pay you, then what you do is you write a credit memo to take the invoice off of your system as if like a bad debt, and that reduces the sales taxes that you would owe in that next period if you're on an accrual basis. Yeah. So, I mean, sales taxes, they're almost as complicated as payroll taxes. They really are. And there's just so much danger in payroll and sales taxes. If you're not on top of it and you don't know what it is you're doing, it can really bite you. I mean, I've had a couple clients where they owe $300,000-400,000 in sales taxes because they didn't remit them properly, and it'll break you. It'll put you out of business. It'll absolutely crush you. Okay. I don't know the question. Actually, you're doing a service, so then it really depends on. So like in Utah, if I take my car into the shop and they sell me parts and labor to fix my vehicle, in Utah, I only have to pay sales taxes on the parts. I don't have to pay sales tax on the labor. In Uintah County, if I take my car down to the dealership and have them do it, they're charging me sales tax on the full boat, because sales taxes in here or in our area are subjected to labor on personal property, meaning non-real estate. Okay, so they're working on my car and I'm paying them labor. They're collecting sales tax on the labor that they do. If I have a contractor that's working on my house, they're not charging me sales tax because they're working on real property. So their labor and their parts, their materials, they're not charging me a sales tax on. So a contractor, when they buy their stuff to put into it, I go buy a bunch of lumber to frame a house, they pay the sales tax when they buy that from the lumber yard, because they're the end user and they're putting it into real estate, so they don't have to charge me as the home buyer or the person building the home who's going to own the home. They don't charge me sales tax on their labor or their materials. But my car is a different story. Or, I mean, it can get awfully complicated, and every county's got their own freaking rule set and their different rates and all that stuff. So
like with catering and food trailers, because I've done private catering events for people down in Park City that had to file like through Utah.
Yep.
But if I had a food trailer, would it be a better idea to just give, like, last time we did like 40 people in Park City, just gave them a flat rate? Would it be better to charge each person for the tax agency?
So there's.
Or would it be about a wash, depending on how many people you're serving? Because I mean, some of my product I brought in, some of it they brought in, and then like you have to charge for 30 cents of seasoning, or is it like,
No, okay.
You put one shake
okay.
salt on per burger or whatever.
So in your case, if I'm catering an event or if I'm parking a food truck in Park City, I'm subjected to their sales tax. It's different if they come up here and pick it up. You prepare it here, they come grab it from you. You're going to charge them Wyoming sales tax because you don't care where they take it, right? You sold it from here. But if I take my truck down to Park City and park it, now I got to deal with Park City's sales tax rate. It's probably 7.5 or something like that.
So I did cookies there, and then once I delivered it,
but you're delivering it.
Okay.
You're taking it there. So then the two methodologies, you could look at it and say, look, it's $10 for this meal, so I'm charging you $10.75 or whatever the sales tax rate is on top of it. Or you could say I'm charging $11, that includes the sales tax. So then when you file your sales tax return, you have to do the math to back into what the actual sales were and how much of that was sales tax, so you can remit it to the. So you take your overall price and divide it by 1 plus or 1 point whatever the sales tax rate is, to get to what your actual sales number was, so that you could say, well, to get $11, that means I got $10.33 for the meal. The other. No, just Utah. Because when you report to the state, you're going to say, how much did I do in Uintah County? How much did I do in Park City? How much did I do in Lincoln? How much did I do in Sweetwater? You have to break your sales down between the different jurisdictions that you're in for sales tax.
This is all still assuming that your payment processor is automatically for you.
True, but you still have to set it up in there, right? Your payment processor doesn't know where you're at.
So Stripe, depending on the card input that the individual puts in, they're going to auto-locate it.
Kind of.
It still gets report back to K1.
But the K1? The sales tax return?
Yeah.
I mean, when you set up Stripe or Square, wherever it is that you're doing it, you're going to tell them what jurisdiction you're actually selling in. They're not going to go off the credit card input. It's where you're selling or doing.
If you make a product here and you ship it to, say, California, do you charge California?
Okay. Amazon screwed this up for the world, right? Okay, yeah. She was wondering if I build the product here and I ship it to California, do I got to collect and remit sales tax in California, or do I do it here? You got to thank Amazon for this, because forever, you remember, you could go buy something on Amazon and you would never get charged sales tax because Amazon doesn't have a physical location in Wyoming. Unlike Walmart, right? If I order something from Walmart online, they're going to charge me the sales tax rate where my nearest Walmart is, or in my state, right? Or where not where my nearest Walmart is, where I live in the state, because there's Walmarts in our state. And so if you're selling through Shopify, eBay, Amazon, all those different online retailers, they are now obligated to take care of. I don't want to say something that's not true, or that I'm misinformed on, but they pretty much help out on all the sales tax piece. But in your case, somebody from Wasatch County calls you and says, will you do our basketball team's jerseys this year? And you put them all together and you ship them to there. I would say to just charge them to Wyoming as if they came and picked it up right now. Because it used to be, if you were shipping it out of the state, you wouldn't have to collect or remit any sales tax. But this is where the Amazon thing kind of bit everybody in the butt with that, to where now where they're mandating Amazon to do what they do, they're also going to require that you do it as well. So I would say that the technical right answer would be to probably file in Wasatch County or wherever it is that they bought from. But in practicality, you're already doing sales tax. I would just treat it as if they came and picked it up here from you. Charge them the sales tax and collect it and do that. No. That's the nice thing about you and I right now, because service industry, we don't have to do sales taxes unless I'm doing labor on personal property. And somebody's head or neck or beard, that's not personal property. You're giving a service. So services are not. I don't have to collect a sales tax on my fees that I do my work for, right? If I'm doing a service, so snow removal, there's no sales tax on that. Handyman stuff working in your, there's no sales tax on any of that stuff. But if I take my car in and they're servicing my car, but they're working on personal property, I got to collect and remit sales tax on it. Pain in the butt.
I don't know if you'll ever get to this idea, but what if someone is has like $200,000 in the bank? They have everything paid for. Their house was cash, everything was cash and paid for, and they're not working, but they're getting interest from their money in the bank, and they're doing cyber mining and stuff. What kind of income tax do you collect? I don't know.
I mean, it's really whatever's reportable, right? And if you're just mining for coins and stuff like that, until you sell the coin, you don't really have anything that, yeah. Because the government wouldn't really know. That's the purpose of these tax forms, the W-2s, 1099s. Gives the IRS an idea of what should be on your tax return. And if they don't receive any documents, well then.
So I have a gaming store. And the gaming store from Utah says, hey, you got your product that I need it. You come up here and get it from me. Since they're going to be paying sales tax from the sales of Utah, do I charge them for sales tax here?
As long as they're sales tax exempt on their purchases, like because they're buying it for resale, then no, you wouldn't have to charge them sales tax. Because they're going to have to collect it when they sell it. So sales tax is an end user tax. So, the lumberyard or, I've got a widget making company and I go buy the materials to do my widgets. I didn't pay sales tax when I got that. And I build a piece of something that's going to go to somebody else that they're going to incorporate into their thing, and then another one. Nobody's charging or collecting sales tax until they sell it to a consumer or somebody at the end. Go ahead.
Okay, so say the whole shirt thing, you pay me to make a shirt for you.
Okay.
Do I charge?
I'll repeat it.
Sorry, do I charge sales tax on just the cost of the shirt or the whole thing?
So,
say it's $30. Say I charge you $30.
but I'm buying it from you.
Yeah, so I charge you tax, obviously.
Mm-hmm.
But do I charge you
On the 30.
The whole 30 or just what the shirt itself?
No, the whole 30.
Labor.
So the question is, do they charge sales tax on just what it costs for them to buy the product before they resold it, and then they sell? So they buy it for $15, they sell it for 30. Do they pay sales tax on the 30 or the 15? It's on the 30. End user. Yeah, that's one nice thing about our community, right? I don't have to pay sales tax when I go buy food at the grocery store. We have. That's what I love about this part of Wyoming is that we don't. We have a very tax-friendly place to live in, right? Our income tax, we don't have a state income tax. We have very low sales taxes. We have some items like food that we don't have to pay sales taxes on. It's nice. And when we do pay sales tax, it's 5%. I mean, the Sweetwater, like I said, is 6%. So, go ahead. Oh, that's a great question. I'm going to half prepare everything so that you can pretend you got it from the store. Yeah, you might have found a loophole there. I don't know.
Listen, if you bake it at home, it's homemade.
So let me ask you this then, and I don't know because it's been a long time since I've done this, but who goes to Take and Bake here in town? The pizza place, Papa Murphy's.
Oh,
Do they charge you sales tax when you buy their stuff? Yeah, because it's not prepared food. I think that's but would the state say that you're half prepared, so I charge you half the sales tax? No, I don't know. I don't know. You probably have an argument to make there that, hey, if you've got to take this and finish baking it.
And like, if I'm not serving it and they're just coming to get it, it's not really prepared as well. You still have to do the rest of the work.
I mean, because you could make that argument at a buffet then, right? And I'd still have to pay. It is. This is why it sucks to have to hire some nerd like me to take care of this stuff for you, because I don't know. Like I don't know, because if I go buy pre-cooked ham at the store that's been wrapped up that I just now have to throw in the oven, I don't know. I don't know. You guys are getting way into the weeds, but think about how this stuff applies to you. I see how it applies to your business for sure. But I would probably venture a guess that anything that you're doing out of a food truck or a catering event would be subjected to sales tax. Yeah. Like I said, man, it's different every year, Rocco. Every year. It's great. The first year we did this when we were over at the Bosie's, my gosh, I think I answered 7,000 personal income tax questions. It was fun. Yes, finally. What a freaking crock of crap too, because that one was the Corporate Transparency Act, where we had to file the BOI reports, beneficial ownership information reports. And the government hides behind terrorism every time they say this, or in this case, money laundering, because they think that everybody that has a single member LLC is laundering money and not reporting it. And so they wanted everybody to go in and report to the government who technically owns these LLCs. And if you didn't report, the penalties on them were freaking outrageous, like $500 a month or a day that they're late. I'm like, that's like, it was stupid. And it's like, and if you actually go in and do those reports, all you're doing is putting who is on the ownership, which they already have if I filed any kind of tax return, whether it was a partnership, an S corp, an LLC, single member, whatever, I've reported that income. So to me, I was like, don't you guys already have some punch list of people already out there that are, bad actors, people that are dealing in drugs and stuff like that, and laundering money through these LLCs. These reports get you no closer to figuring out who's laundering money. And yes. Which I don't think is a bad thing at the bank, because for them to open an account, that's fine. Yes. It was not a better word for it. Yeah.
They want more information about your business, and they don't want to tell you any other way that they're nosy, and they want more information.
Right. Well, and honestly, it is still around, but it's really only for foreign ownership in a U.S. entity. So those are the guys that still have to report that stuff. What's that? You don't have to, unless you have a foreign partner or somebody like that, then you would have to report the BOI. So cool. Any other questions? Cool. I think we're pretty much there. Go ahead.
If you were to introduce a CPA to work with you, what question would you ask them to kind of get a gauge on if they're up and up or they're good?
A CPA? Because so, like, if you're coming in as a client to try and talk to them, there's different. So, like, I have my CPA, and I'm a tax and consulting type CPA. I don't do audits in the forms of financial audits. So audits, like with the IRS, if I've got a client who's under audit, I help with those. But there's auditors that are CPAs. There's tax and consulting experts like I am.